Hello and welcome to Dig This, a podcast by The Quarry. Today we'll be looking at digital finance. With me in the studio is GFSC Director General William Mason. Thank you for taking time out to talk to us today.
Oh, good morning.
Good morning. I've actually written down a quote here, which you said recently. It was how you want to be the regulator of the alive, the innovating, the growing and the prospering, which was picked up by some people as a bit of a remarkable change of tone. But could you just tell me a little bit about it?
Yes, it's very interesting what people think and what is actually the underlying reality. I think the underlying reality is we've always wanted to be doing that, but it's a process like passing the FATA, Financial Action Task Force Moneyval inspection, which was critical for the bailiwick's long-term prosperity, and which we, as the Commission, were one of the leading agencies to help us get across the line. That becomes a very subsuming process, and you've only got so many people who can do so many things in a small organisation at the same time, and you tend to get yourself deeply embedded with working with industry, working with government, working with law enforcement to get through that. And thus, people think that you're just interested in Moneyval. You're never just interested in Moneyval, but that happened to be the policy priority at the time, to keep the bailiwick safe, make sure that our foundations remain secure, that other countries didn't stop looking at us as a good place to do business. So certainly through till December 24, when we had the Moneyval main plenary meeting to take the decisions in Strasbourg, we were focused on that. We were trying to do other things at the same time, but you can only do so many things at the same time in organisations. So with the Digital Finance Initiative, which we launched, and with the redoing of the funds, which we did last year, the Private Investment Fund, and equipping it better for family office use and things like that, that we were doing that very consciously to, as it, I suppose, re-signal what we'd always wanted, which we do want to have good conversations about innovative businesses. Naturally, there's an economic cycle, and some old businesses, the world changes, they'll decline, and one has to accept as a jurisdiction that some of your existing businesses are going to decline, some business models fail, become obsolete, and thus we, as the regulator, working alongside Guernsey Finance and others, need to be helping inculcate a new stream of new finance businesses to replace the natural wastage you'll get from the old ones declining.
You mentioned digital finance, and it's obviously a big field to be looked at the moment. Why now? Why start that consultation?
I think primarily now because we wanted to indicate we were interested in it. If one goes back a few years, there were a number of very flaky enterprises associated with some dubious practices and, frankly, with some criminal elements, which were trying to sell things which looked very glittery to the general public, which were anything but. And at that juncture, we saw there was a very big risk for Guernsey, which is a wealth centre, it's a fund centre, it's an insurance centre, to being damaged by being associated with initial coin offerings which were flaky, because there was no underlying substance to them. The people behind them were often get-rich-quick merchants, and we really didn't want Guernsey to end up in the same place as, say, the Bahamas has ended up with FTX. You've invited one of these people in, they do things very badly, and it tends to look rather fraudulent with the benefit of hindsight. So I think that was the right stance which we took after consultation with government at the time. But the technology's matured a lot more, and I think there's been a very, very big change with Donald Trump coming into the White House. Now, many people won't like Donald Trump, I appreciate that, but I think as a jurisdiction we have to work with all sorts of different people, and one doesn't always have to like people to think that it's very helpful to be able to work with them. And what the US government's done since Donald Trump came to power has totally changed the landscape of digital finance. If I'd been in meetings 15 months ago, 18 months ago with the US Treasury, they'd have been very hostile to many aspects of digital finance. And because of that, I think there was a global chill on them, because nobody wants to actually anger the US Treasury. It's really not very good for your financial health, angering the US Treasury. So what changed is Donald Trump coming in and his administration and all his regulators frankly doing a bit of a volte-face and suddenly saying that this is the future of finance. And in those circumstances, a small jurisdiction such as Guernsey has a lot more latitude to welcome these things than was the case. I mean, the US is, probably speaking, our second largest trading partner for financial services business, and one generally wants to be doing things which conform to US policy because they don't have to trade with us. They trade with us because they like us. We're a jurisdiction of choice. And the fact that the US is now, with its Genius Act and things, going down a very permissive, encouraging route on digital finance gives us some scope to do so too.
And when we talk about digital finance, for people like me that are uninitiated in it, basically, what's its scope? What does it mean?
There's several different elements to it. Quite often, but not necessarily, there's the use of this thing called the blockchain, which is a digital ledger. So historically, if one thinks about accounting under the Medicis, you had double entry bookkeeping, and they had their ledgers, which were books, in which they wrote, 2 entries for every item, and thus they could counterbalance fraud. What's happened is that is moving on to often a public blockchain where all the transactions are available to all parties partaking in the market. And if one thinks about the complexity amongst some of those current settlement arrangements for, say, stock exchange trading, you do look at quite a transformative way you can do that. Similarly, in terms of how fund units, i.e. share certificates, are dealt with, they've been dematerialised, i.e. they haven't been paper for 30-something years now, but actually being able to have them doing instantaneous settlements. So I sell you a share certificate in the quarry and you give me £1, and we'll call it a stablecoin £1. That can now be done instantaneously on a public blockchain, whereas before you'd probably have had to have it settled 3 or 4 days later. There'd be mistakes, a lot of bureaucratic cost, etc., etc. There's lots of other aspects to it. Part of it's about the use of AI, but not necessarily. Part of it is about disintermediating banks, and there's a lot of problems with cross-border transactions, the way some jurisdictions have been frozen out of the big banks and they've almost lost financial access to the international system, and that the stable coins can help people move across different borders at much lower cost for business and friction. Part of it's, well, classically, you have something like a tower block, say it's got a lot of office blocks in it, and it's a very illiquid asset. There's a concept yet to be fully tested that if you can tokenize that and you can have these digital tokens, each representing, say, 1% ownership, then you can actually have a traded market in that through the public blockchain, so that a lot of asset classes which were previously very illiquid, i.e. if you were in trouble, blooming difficult to raise cash off them, that they're now becoming, it can be made liquid through this technology and thus much more easily tradable, and thus one creates new markets and new opportunities for wealth management.
It sounds like lots of opportunities. Like, how well is Guernsey positioned at the moment to take advantage of this?
I think thanks to the money of our result and to the fact that we didn't jump into the first wave, which I'd equate to something like the dot-com boom, with both feet and then sink up to our waists in mud, we're very well positioned. We've got a very good reputation for being tough on financial crime, and nobody wants to transact with a jurisdiction which is seen as being soft on financial crime. We've got a lot of good banks in Guernsey, we've got a lot of good insurers, there's a lot of fund administrators and a lot of wealth managers. So we've got a lot of the key components there. If we think that our fund sector is worth probably 300 billion, something of that order, then those funds, if they want to tokenise, well, we've got actually, as it were, some base business there, and as they tokenise, if they tokenise, then, as it were, there's some underlying volume already in the jurisdiction to do some of these things. We've also got a good set of custodians in the jurisdiction who are charged with looking after things like share certificates, and in the future they need to adapt to looking after digital instruments, tokens and so forth. So we've got a lot of the base stuff we need here, and dare I say it, the law's actually already quite benign. The states passed digital signature legislation a long time ago, and we've got some of the fundamental laws in place which allow people to do some of this stuff.
And I could presume that there's a balance to be struck here with the regulatory burden to ensure that innovation can happen and happen in the right way? How tricky is that?
There's always a balance to be struck on these things. What one needs to have is the right regulations in place, because if there's no regulations, it's sort of a dog-eat-dog situation. And why would people have any confidence? People want legal certainty. They want to know if you're putting half your pension fund into tokenized shares, I suspect you have a healthy desire to know that those tokens aren't going to suddenly vanish overnight, and you want to have a regulatory regime which, alongside proper boards doing their jobs properly, gives you that sort of assurance. Conversely, I don't think it's sensible to jump to trying to regulate for every conceivable circumstance, because it just looks for your, especially for your tech entrepreneur, more so than your financial services entrepreneur, it just looks too blooming difficult to deal with. And I think what you've got coming together here is a lot of tech entrepreneurship with some financial capital. And I think we need to have a system which is clear and straightforward, but which isn't off-putting to people who are primarily tech bros, rather than being people who've been doing bank compliance for the last 20 years.
So it's a sort of really interesting time when you've got those two different industries coming together, and you're dealing with different approaches, I guess. Can you talk us through a little bit about the challenges that are involved in this sector?
It's complex. I've certainly spent a lot of the last couple of years trying to understand the technicalities of the blockchain and how it works. And people say public blockchain, oh, isn't that risky? And we've suggested in our consultation paper that we liberalise what we allow in public blockchain. If you actually unpack it, you've got fundamentally three layers to this blockchain. And yes, the layer one is public, but then the developers and the promoters, they use layers 2 and layer 3 of the blockchain to do things like putting in anti-money laundering controls, which are clearly essential for financial services, and frankly producing a nice little app on your phone, which will be the layer 3, which will allow you to do the transactions you want as a consumer, and that's clearly in a very private space, but then the sort of amalgamated transactions get them fed onto layer 1 of the public blockchain to give them some permanence there. So you need to be happy getting your head around those complexities. I mean, I used to say in finance that the most complex thing for a regulator was understanding the balance sheet of a large life insurer, or the trading book of an investment bank. Now I think it's understanding how some of the operational flows of some of these transactions on the blockchains through tokenization actually work. And we have to be comfortable that the firms we license also understand that and can put in place sensible controls to make sure that actually people's money doesn't get stolen.
What kind of interest has been expressed in the island so far? Because I know, linked to this as well, I know you've got the consultations launched, you've got the sandbox environment for people to use as well. So there's a few elements to this.
We've been really encouraged, actually, since we started making a noise about it, and particularly since we sort of tried to package up some of the different things we were doing about sandbox, concierge, rule changes under the Digital Finance Initiative. We've had a number of approaches to our authorisations team for discussions about doing not difficult things, but different things within the digital finance universe. You always wonder, is it a case of build it and people will come? And sometimes it is and sometimes it isn't. But certainly it is, 4 or 5 months in now to launching the Digital Finance Initiative. We're pretty encouraged that both people on island and off island are interested in what we're doing.
As part of the Digital Finance Initiative, there's talk in there about the sandbox. What is a sandbox? How does it work? What's it trying to achieve?
Well, it's essentially trying to make, I think, the regulatory process less daunting for people who haven't been doing regulated financial services business forever and a day. It's also about providing a zone in which you can try experimental things which maybe don't entirely conform to the current rule books, and we've had a soundbox for ages, but we realised that nomenclature was frankly out of date. That was about, come in, talk to us about your new proposition, and we'll tell you what we think about it, and then you can shove it in an application. The sandbox has become, I think, the internationally accepted terminology. And what we can do, say, is a firm comes into it. Say you're a tech entrepreneur. You want to set up a stablecoin in Guernsey, and you want to have it run in XYZ fashion, which doesn't quite fit with all the rules. So maybe we can give you a license under the sandbox, but we put some conditions on the license to keep the public safe, saying, yes, you can try this, you can see if it works technically, but you agree under the condition that you're not going to go near retail investors for some time, you're just going to deal with professional counterparties and things like that. So it provides a zone where, frankly, the men and women running clever stuff in their back office don't think, or their garage, don't think it's just too blooming hard to scale. It hopefully provides an environment which people scale ideas, test things out, and then they find they actually work technically with a smaller audience, and then hopefully they get some venture capital and private equity capital to be able to scale those ideas to a full-scale solution coming out of the sandbox. That's the sort of theory of how it works.
Has there been much interest or much success from it?
I was having a conversation yesterday with quite a significant tech entrepreneur who might be very interested in putting something in the sandbox. I can't give more details than that, but yeah, there's certainly some interest in exploring it. And my colleague Gillian Browning was also having a conversation with another tech entrepreneur a few weeks back about the use of it. So yes, it's a theoretically an interesting construct. For example, we're going to be consulting on the rules. I'm sorry, I'm waving this because I did print out the whole consultation paper here, and it will take us some months, with the best will in the world, to digest the results of consultation, then do the fine crafting of the rules, maybe if there's something which involves the states and changing aspects of the law, to liaise with the states and to ask the various states committees to approve that. What you can do with a sandbox is if an entrepreneur comes in and says, I really like this chapter of your consultation, we can say, okay, well, let's set you up in the sandbox while we get round to getting the rules to catch up and go through all sorts of proper governance processes, rather than having to say to them, oh, come back to us in July when we've done all this process, which the entrepreneur who's keen to start something tomorrow morning doesn't really want to hear.
And what would be good, going right back to mentioned very early on about the role of AI and how that could be coming into compliance, and where are we with that at the moment?
Well, one chapter of the consultation we launched in December which sort of talks about reforming our handbook. And frankly, we rewrote our handbook in 2017. And we made quite clear when we were rewriting our handbook in 2017 that we were very happy with digital forms of ID. But the trouble is, people are often very happy with what they know, so you still get into this thing of, where's your passport, where's your 2 utility bills? Now, you and I know perfectly well, you can go onto the internet and get a pretty good fake passport authenticated, and you can certainly order up a utility bill for pretty much any utility company you like and just press a button and off it prints, and theoretically. So I think just genuinely doing the job thoroughly, there's a good case for moving to more digital forms. And in the consultation, we've actually in the handbook text we've published, I'll read it to you because it's great. It is quite interesting. We are taking a stance here. We say, the Commission encourages all firms to consider how developments in technology could assist them in complying with their obligations, as well as streamlining their business processes. We are saying basically that we're adopting a technology positive stance, because we think, if we think about how we can help firms cut their administrative burdens, which are costly, while still enabling the same quality of outcomes in, say, AML defences, if people can use digital ID of customers to easily go from the wealth manager to the fund manager who maybe is looking after some of the wealthy person's money, through to the bank account for the bank account opening, that cuts out a whole lot of bureaucracy and hassle, and hopefully makes Guernsey a more efficient place to do business. So certainly in that area with our consultation, we're very much leaning into it and actually positively encouraging firms to use some of these new technologies.
Is that being seen already from experience?
We've done a couple of surveys in the last year looking at actually the practice of the use of AI. I think it was fair to say when we did those bits of work, we were more at a formative stage in the bailiwick than in a sort of all systems go full implementation, but it's growing all the time. If you're talking to UK firms, I think something like 85% of UK financial services firms are now using AI. And the trouble is, if you don't use AI, it's likely that your costs are going to be higher than your commercial rivals who do. Thus, I think we'd make the argument it is a new general purpose technology. Does it have issues? Can it hallucinate? Yes, absolutely. Should firms be careful and cautious, as you should with any big IT project? Yes, of course you should. Should you do your due diligence, do your blueprints right, and understand what it'll do and what it don't do? Of course you should do all those sort of good things. But if you don't adopt it, you could be just totally outcompeted by your competitors off-island who have maybe invested more and can cut whole layers of process out of the system and thus offer a much cheaper service of an equivalent quality. I think AI, it's very interesting. We actually did AI projects before it became fashionable in the Commission. And we've used machine learning technologies, for example, to go through things like the fund returns and the management letters, which you get for the many hundreds of funds there are in Guernsey coming in each year, and saying, is there anything which you need to worry about here? Now, believe you me, it's an incredibly tedious job, the sort of which makes your eyes glaze over very fast, reading all the management letters which come to us from the accountants. They often, in the small print, are actually telling us quite important things about those funds which we need to be conscious of. So we've developed technology which can read those automatically and then flag for the human supervisor, actually, I've just read these 120. Here are 20 which look a little bit curious, where maybe the accountant's trying to tell us something subtly, which you might want to actually read yourself. So if you think about that, that's a huge amount of manpower which you can save, which you can put onto more fun tasks than just reading accountants' management letters. So I'm sure accountants would possibly disagree with me that their management letters are not the most scintillating thing to read.
Like, look to the future a little bit. What do you expect to get out of this consultation? What are the targets and the hopes?
I think it's worth saying a few words about what we did going up to the consultation. We didn't just suddenly sit down in a darkened room and write all this stuff. We used the digital forums, which basically round tables between ourselves and industry, to invite their view, not just the salespeople within industry, not just the compliance officer, but also the technologists, about, well, what was interesting here, what were they interested in. We went out and we talked to some overseas regulators about what they were doing to look at what best practice was. And then, based on that, we've basically set out some ideas and proposals of how we think we ought to alter the Guernsey's regime to ensure that it's pitched in the right place. We've got roughly a 2.5 month consultation window running through to 6th of March, I believe. And what we hope we get back is insights from firms as to things we haven't thought of, or them just coming and saying, yes, we like this. You've got a new putative stablecoin regime, which you're trying to build as a new chapter within the virtual asset service providers, crypto for people not speaking jargon, the crypto regime you've got. Yeah, we like this, or actually, we don't think that bit works. So could we have that bit instead? And if I go back to the process, which was very interactive, we went through early last year when we were reforming the PIF rules, we put out some ideas we thought were quite decent ideas of how to improve the regime. And then a number of the island's law firms in particular came back and said, yeah, that's okay, but why don't you do that? That'd be even better. And what we found was that what we were able to publish as the final rules in May there was much stronger, because it had both our best ideas and then industry reflecting on those and offering us ideas which allowed us to make the proposition still stronger. So I think that's what we're hoping to get out of it.
I mean, it shows a regulator listening, I guess, as well, and that's the strength.
Well, certainly in digital finance, I don't think anybody knows all the answers. We've spoken to some of the most advanced regulators on this, and you get into questions about, how do you trace access on the blockchain? What's the limits? And yes, you can do it, but it's quite difficult. And there's a lot of things there which people haven't got the perfect answers. So we're certainly not sitting here claiming we know it all.
I mean, I guess it also plays a role in ensuring that you're operating as an efficient organisation as well.
It does, and I mean we're doing a lot of investment at the moment. I mean, one thing we've done over the last year, I won't say this is pure AI, it's not, but we've developed this new applications and authorizations portal, which is designed to allow all the people involved in setting up a new financial service venture to interact with each other privately, because if you say you're doing a fund, you need a promoter, you need a lawyer, you need an accountant. They can all come together, and rather than scrabbling around with a lot of Word documents emailed, they can work at it all on the portal or do all the signatures, the authorizations there, and then it comes to us and we can liaise with them on the portal and let them know where they are in the process, in the same way as you're track your post office parcel, your DHL parcel online. You can sort of do that through our portal, and thus making us much more user-friendly. And what we've done in the back office, as it were, we used to have to do an awful lot of copy typing when somebody sent us in a Word document application putting on systems. That now goes straight through onto the systems automatically. And we, as you would expect, we run checks or using systems like WorldCheck about, is this person honest, or is there adverse publicity about them? That now all happens automatically through the authorizations portal. So you've got a lot of straight-through processing, which reduces the probability of manual error, and it also makes the work hopefully much more efficient, both for the people wanting to do the business in Guernsey and for ourselves.
And just my final question, I guess, is Guernsey well positioned for growth, for economic growth and success?
I think we have got a lot to be thankful for. We've got a government which historically over the last 20, 30, 40 years hasn't lived to any great degree beyond its means. That means there's very low public sector debt compared with almost any other jurisdiction, short of, say, Qatar, which is clearly hugely wealthy on gas fields and things like that. That means that fiscal control can mean that public expenditures don't have to rise very hard, which means that our fundamental attractiveness as a low tax domicile where there's good rule of law, there's financial stability, you've got skilled and honest judges, and skilled and honest judges don't happen all over the world. To safeguard people's wealth, you've got a skilled industry. You can walk around, you can talk to all the people you need to put together a fund, a wealth management proposition very easily here. We've just had the improved connectivity coming through from economic development with the Heathrow link, which gives us straight through ticketing to Asia, to the Middle East, to North America, our main markets. So I think there's an awful lot to be optimistic about.
Appreciate your time. Thank you.
Pleasure. Thank you.
Thank you for tuning into this podcast. If you've got all this way, I'm really hoping that you've enjoyed our work. There's a few things you can do though to support us. Follow, like, subscribe, share, whatever you can do to help spread the word of the Quarry. The other thing you can do is head on over to our website, where you can become a member and really support independent local news.